A week ago, Bitcoin printed its lowest price of 2026, $59,100. This week was the rebound. The question is whether it's a floor or just a pause. Let's set the record straight on timing, because it matters. The ugly part already happened. Over the prior weekend, Bitcoin broke below $60,000 for the first time since 2024, bottoming at $59,100. That was a Friday jobs report doing the damage. Strong labor numbers pushed rate cut bets out, yields up, and risk assets down across the board. So Bitcoin walked into this week already off the lows. Monday it was defending its 200-week moving average near $62,800, a level that has marked the bottom in most past cycles. It held. It chopped there for a few days. And then Thursday and Friday, it pushed back up to roughly $63,700. What flipped the mood was almost entirely outside crypto. First, Iran. Trump called off planned strikes and floated a deal. Oil rolled over toward the mid-80s on Brent, and that took some heat off the inflation worry that had been keeping the Fed hawkish. Second, the SpaceX IPO, the largest ever, priced at $135 a share and opening up about 20%. A blockbuster risk-on event that pulled speculative money back into the room. Crypto rode that wave. It didn't create it. And that's the tension in this bounce. It's borrowed. Look underneath the price and crypto's own plumbing still looks soft. ETF demand is the clearest tell. Over the trailing 30 days, spot Bitcoin ETFs have shed about 74,000 Bitcoin of demand, the weakest stretch since the funds launched in January of 2024. Instead of soaking up sell orders, the ETF spent this week adding supply. Most holders haven't fled, but new money isn't showing up either. Ethereum is where the damage really shows. Ether spent the week under $1,700, down around 21% at its lows, and its share of the total market has slipped to roughly 9%. When the second largest asset is bleeding dominance into a bounce, that's not a healthy risk on. That's a flight to the majors. The Treasury company trade is creaking too. Nakamoto, the Nashville Bitcoin company behind Bitcoin Magazine, sold around 600 Bitcoin this week to cut debt and fund a buyback. The very holders who spent last year accumulating are now selling to shore up balance sheets, and that reflexive selling was part of what made the original drop so sharp. Over in Japan, Metaplanet went the other direction, buying a securities firm to start selling Bitcoin yield products. Same model, opposite move. The week also had its exploit. Humanity Protocol got hit on June 9th, a roughly $32 million drain on BNB chain that also triggered an unauthorized mint of 100 million H tokens. But ZachXBT flagged the whole thing as possibly staged, and here's the tell. The token traded up afterward. A real theft tanks the token. When it pumps instead, and the on-chain investigators smell a setup, treat that headline loss number with suspicion. Now for the one place capital actually rotated into. Privacy. Monero spiked as much as 33% this week, briefly tagging $438, in the middle of a $120 million on-chain laundering maze that ZachXBT was tracing in real time. Tether ended up freezing $72 million of USDT tied to it. Zcash held up near $428. And the through line underneath it, quantum. Coinbase put out a warning this week that Bitcoin needs to prepare for the quantum threat now, while Washington pushes a $2 billion quantum bet. Privacy and quantum resistance were the only narratives bid, while everything else was defending support. Looking ahead, 2 dates. The Fed meets June 17th, and crypto has traded poorly around most of these meetings lately, so that's the next test for the bounce. And BlackRock filed to list a Bitcoin income ETF, with a debut expected as soon as next week, a new wrapper landing into the weakest ETF demand backdrop in 2 years. Here's where we land. A bottom call needs Bitcoin to defend the $60,000 line and the 200-week average on its own, without an Iran headline or a rocket IPO holding it up. This week, it didn't have to prove that. Next week, with the Fed in the room, it might. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.